Good morning, trader. Steve Gans here, back from Hawaii. Still wearing my funky glasses. I didn't wear them in Hawaii because I wasn't at my screen all day. I was just at my screen a little bit during the day. Now that I'm back being at my screen a good portion of the day, not trading, by the way. I only pretty much trade in the first hour and then the last hour of the market, but I'm at my screen doing other things. One of those other things is developing this trade, the Flyagonal. This is a trade that I alluded to in the weekend update, and I want to just share a little more about this with you. This is going to be a wacky, complex trade, so you're going to probably want to go back and play this a second time to understand it a little more fully. This is not a trade I'm recommending that anyone do without massive amounts of paper trading and studying it. So the premise behind this trade has two components to it. One is a butterfly, which I am doing as a call butterfly. Let me just slide the dial here forward so you can see, of course, the normal butterfly configuration. So this is an all-call butterfly that will benefit if volatility drops and if our market, or in this case PayPal, moves up to about this 83 point. That's where it's going to hit its peak or max profit. But anywhere up in this tent is fine. So time decay is going to help that butterfly, as well as a drop in volatility helps the profitability of that butterfly once you get up inside that tent. Now, this is going to be done as an earnings trade. PayPal announces earnings tomorrow morning. The premise behind the Flyagonal is we want A, time to pass, and B, we're looking to have a change in volatility. Now, that change could be a drop in volatility, which usually happens if the price of the underlying moves up. So in this case, after earnings, if PayPal moves up and volatility drops, and a day or two has ticked by, this trade is going to benefit greatly from a move like that. Again, time goes by, volatility drop, all of that is perfect for this trade so long as we're up within that tent. Now, what if we're not within that tent? What if instead I get a rather significant down move and volatility increases? In that case, both of those scenarios are going to be bad for this existing butterfly. So, how might I combat that? I combat that by doing a put diagonal trade. So let me just bring both of these into the equation here and include them, and you'll see what I'm talking about. So, if I bring these two into the mix, let me just move this out again here to expiration so it's a little easier to see these outlines. So if I bring that diagonal into the mix, now you can see that I have a tent down here, and then I have my butterfly configuration up there, and we have a range from roughly 71 to 86, which is a generally profitable range for this trade. Now, that range is not by accident. That range is because if I come in here and look, after PayPal earnings, it could spike all the way up to that 86. I think there's resistance up in that area. It could drop down into that 71 range. I think there's support in that area. So that's how I ended up basically deciding that was the range that I wanted to be able to cover with this trade. Can PayPal go outside of that on both sides? Certainly it can. If it does, this trade will end up a loser, more likely than not. However, if PayPal stays within this very wide range, again, let's look at the couple scenarios. Let's go back here to today. But the couple scenarios, you can see a little bit by this dash line that shows halfway through expiration. Just time expiring on this is going to help that trade. But what if time goes by and volatility drops? If volatility drops, that more likely than not mean we went up in value. That's going to be perfect for this trade. The butterfly side of the trade is bringing in significant value. What happens if the price goes down? If the price goes down, more likely than not, volatility increases. If volatility increases in a big down move, look what happens. Not only does my tent widen out significantly, it goes from the 71 range out to 68, somewhere in that general range, but my T0 line here mounds up higher yet as well. Now keep in mind that going into earnings, volatility is already high, okay? So the likelihood of volatility going up much isn't great unless PayPal has some large dramatic move. If PayPal does in fact have a 5%, 7%, 10% move down, that volatility will likely go up even though the earnings have already been announced. So this is what is called the Flyagonal trade that I have developed. And I've used AI a lot in doing simulations and things like this. And I'm also developing different variations of this. This one is called the Flyagonal because it is a butterfly and again, the diagonal. Now there's another variation I'm working on called the conagonal and yet another one called the vertagonal. So these are a series of 3 trades that are going to be designed to be used in different types of market conditions. So I know I referenced that in the weekend update, and I wanted to just come in and share with you a little more about that particular concept of a trade. I'm sure there's going to be questions coming in on this. I'm still in the development stages myself and the testing stages myself, and I can't answer lots of questions on this yet. I have personally done about 55 trades, variations of this Flyagonal. To this stage, 53 of the 55 have been winners, and those 53, including the 2 losers, this total trade concept is up about $21,000 in the last 8 weeks. So I do consider this to be a very viable trade concept that has some self-adjusting properties. By self-adjusting, I basically mean that if our market goes up, volatility usually goes down. And again, that will land right in the center of that tent, and it will be favorable if volatility drops further on that. The flip side, if the market or the underlying goes down, volatility usually goes up. If volatility goes up, of course, that benefits the diagonal or the downside of this position. That doesn't mean that they may not require adjustments if it runs really hard one direction or another. But right now, in many cases, they have not required adjustment. They self-adjust as the volatility and the underlying price shifts. So again, if you like this sort of content, please give me a thumbs up, a subscribe. Feel free to leave comments, but again, won't be able to do a lot of Q&A on this at this point. It is a pretty complex sort of trade. There's lots of nuances to it, way more than I could begin to go into in answering a few questions. So thanks everyone for your understanding on that, and we'll see you later.